People who have the inside knowledge about an industry benefit from it. It is not different in investing. Access to the right information and insights gives an edge. Before we delve into one such enlightening perspective, let's first explore 5 thought-provoking ideas researched by White Oak AMC. The first point discusses the optimal date for making your SIP investment. Do you know the SIP date that yields the best return? White Oak AMC analyzed 26 years of data using the Sensex. Here is the average SIP return, assuming you had chosen to invest on any date from 1st to 28th of a month. You will see that there is no significant variation in the average return on different dates that you could have chosen. So, the best date to invest is typically the earliest date when you have the funds available with you, such as the salary date. The second question is about the frequency of your fixed monthly investment. Should you invest the entire amount once a month or spread the same amount over 4 times a month, which is weekly, or divide it on a daily basis? As you can see, the choice between daily, weekly, or monthly SIP frequency has minimal impact, as all three result in similar returns or XIRR. So the main lesson from this analysis is to invest small amount regularly over the long term. This is more important than the frequency one selects. The third question addresses a common concern: the fear of investing when the market seems very high and there's an uncertainty that the markets may correct. The real question is whether it's possible to time monthly purchases. In reality, we can only determine if the market was high or low in hindsight. But let's assume one investor was lucky and was able to time his investments perfectly. Another was unlucky. And let's say there was a third investor who consistently invested on a set date. Even if one could time it, there would likely be very little difference in returns among these scenarios. Waiting for the perfect time to invest leads to missed opportunities. Not investing is a bigger loss than investing even at unfavorable time. Even investing in the worst times helps create wealth. The fourth point to consider was, should one invest in large cap, mid cap, or small cap? And here there is a clear distinction. While large caps offer relatively better stability to a portfolio, mid cap segments offer higher return potential for investors planning to invest through long-term SIP route. The last point, what is the ideal time duration for which one should be investing in SIP? How long is long-term really? Studies show that the equities have been volatile in the short term, but volatility reduces as investors increase their time horizon of investing. 8 years or more, you will see there is hardly any chance of a negative return. Higher is the probability of getting good returns. It is about overcoming whatever fear gets in our way when chasing big ideas by focusing on the very next small but manageable step and repeat it. If you look at the data for the past 25 years, there were 6,565 trading days, of which 3,289 days markets had given negative return. Returns ranging from minus 0.1 to minus 12%, which means for almost 50% of the days that the market was functional, it has given negative return. So the first truth is, market corrections, market's negative return is very much part of the process. You cannot receive only positive return. Now, if you look at the number of days when the markets crash significantly, which is more than a 5% crash in a day, there were roughly about 32 days. This illustrated the fact that big corrections happen only once in a blue moon. It is not frequent. In percentage, it is less than about 0.5%. It is for such a remote event of 0.5% that investors fear and make decisions that are irrational, such as not investing as per one's own risk profile. SIP helps in participating in these 50% of the days by averaging the purchase price lower. The 0.5% of the days can be looked at as an opportunity to buy big as markets eventually rise. In spite of all these corrections, markets in the long run have on an average given returns in excess of 12%. If you want help in creating a new income stream using SIP, then do check out this video linked in the comments. This can help you start a new business by understanding certain metrics differently. If you like this video, please do share it with your friends, like it and subscribe to this channel.